ParthKuchana.com, complete fundamental and technical analysis of stocks and other financial industry updates. Hello, welcome to Partha Kuchana Finance channel. This video provides complete fundamental analysis of Tata Consultancy Services Ltd TCS stock. Disclaimer: this analysis is for educational purpose only. This is not financial or investment advice. Make financial and investment decisions on your own. Valuation. Let's focus on assessing return on capital, equity efficiency, overall pros and cons, and valuation and calculation of key ratios and interpret them. This is based on market cap, current price, high-low, ROCE, ROE, pay ratio, book value, face value, financial ratios data. Fundamental analysis. Return on capital employed, ROCE. Current ROCE, 64%. Analysis: TCS has demonstrated a robust ROCE, improving from 52% in March 2013 to 64% in March 2024. This indicates the company is highly efficient in utilizing its capital to generate profits, which is significantly higher than industry averages. A high ROCE reflects strong operational performance and effective use of capital. Return on equity, ROE. Current ROE, 51.5%. Analysis: TCS's ROE is exceptionally high, showcasing strong profitability and effective equity utilization. The improvement from previous years signifies increasing shareholder value and efficient management. A high ROE suggests that the company is delivering substantial returns on shareholders' investments. Price to earnings, PE, ratio. Current PE ratio, 31.6. Analysis: the PE ratio of 31.6 indicates that the stock is priced at a premium relative to its earnings. While this might suggest high growth expectations and confidence in future earnings, it also means that the stock may be overvalued compared to industry peers. Investors should be cautious and consider growth prospects and market conditions. Book value. Current book value, 250 rupees. Analysis: the book value of 250 rupee per share provides a baseline for the company's intrinsic value. With the current stock price at 4,155 rupees, TCS is trading at approximately 16.6 times its book value. This high multiple reflects strong growth prospects but could also imply overvaluation if future earnings do not meet expectations. Face value. Current face value is 1 rupee. Analysis: the face value of 1 rupee is nominal and does not significantly impact the valuation directly. It mainly serves as a reference for the stock's par value. Pros. Debt-free status. The company is almost debt-free, which reduces financial risk and provides more stability. High ROE. TCS's strong return on equity of 51.5% indicates effective management and significant shareholder returns. Healthy dividend payout. The company maintains a healthy dividend payout ratio of 66.2%, providing consistent returns to shareholders. Cons. High valuation. The stock is trading at 16.6 times its book value, which may indicate overvaluation and higher risk for potential investors. Slow sales growth. A modest sales growth of 10.5% over the past 5 years may be a concern for future performance, especially if market conditions do not improve. Conclusion: TCS exhibits strong financial performance with high ROCE and ROE, indicating efficient use of capital and equity. However, the elevated PE ratio and high trading price relative to book value suggest that the stock is priced at a premium. While the company's financial stability and healthy dividend payout are positive aspects, potential investors should consider the high valuation and modest sales growth when assessing the stock's future prospects. Financial health. Let us focus on financial health and leverage analysis. Review asset and liability management and equity changes. This is done focusing on assets, liabilities, equity, key metrics from the balance sheet over the last several quarters. Financial health and leverage analysis. Assets. Total assets increased from 51,932 crore rupees in March 2013 to 1,45,472 crore rupees in March 2024. Key components. Fixed assets showed a general upward trend until March 2020, peaking at 21,298 crore rupees, but slightly declined to 19,604 crore rupees by March 2024. This indicates stable long-term asset investment. CWIP, capital work in progress, consistent fluctuations, with a notable increase in March 2024 to 1,564 crore rupees, suggesting ongoing capital projects. Investments rose significantly from 1,897 crore rupees in March 2013 to 31,762 crore rupees in March 2024, highlighting substantial growth in investment activities. Other assets increased from 38,312 crore rupees in March 2013 to 92,542 crore rupees in March 2024, reflecting a growth in current assets or receivables. Liabilities. Total liabilities grew from 51,932 crore rupees in March 2013 to 1,45,472 crore rupees in March 2024. Key components. Borrowings relatively low and stable, with a slight increase to 8,021 crore rupees by March 2024, indicating conservative debt management. Other liabilities increased from 13,054 crore rupees in March 2013 to 46,962 crore rupees in March 2024. This reflects rising obligations, possibly from operational or financial commitments. Equity. Equity capital stayed fairly constant with a slight increase, reaching 362 crore rupees in March 2024. This indicates stable capital base without significant new issuance. Reserves grew from 38,350 crore rupees in March 2013 to 90,127 crore rupees in March 2024, reflecting accumulated earnings and retained profits, enhancing financial strength. Key metrics. Leverage ratio. Despite an increase in both assets and liabilities, the conservative approach in borrowings and a strong increase in reserves suggest a low to moderate leverage, implying effective management of debt relative to equity. Asset management. The consistent growth in total assets and investments shows effective deployment of resources and expansion capabilities. Liability management. The rise in other liabilities needs monitoring, but overall conservative borrowing suggests manageable debt levels. Conclusion. TCS demonstrates robust financial health with substantial growth in assets and reserves. Conservative debt management, as evidenced by stable borrowings and increasing reserves, highlights strong leverage control. The growth in investments and assets indicates strategic expansion and effective resource utilization. The financial structure appears stable and well managed, with a low risk of financial distress. Cash flows from financing activities. Now let's look at the trend and interpretation of cash from operating activities, cash from investing activities, cash from financing activities, net cash flow. This is done focusing on cash flow data over the last several quarters. Cash flow analysis. Cash from operating activities. Trend increased consistently from 11,615 crore rupees in March 2013 to 44,338 crore rupees in March 2024. Interpretation. This strong growth indicates robust operational performance and an increasing ability to generate cash from core business activities. The steady rise reflects operational efficiency and profitability. Cash from investing activities. Trend, initially negative, showing significant outflows in March 2013, minus 6,038 rupees crore, and peaking at minus 16,895 rupees crore in March 2016. However, there is improvement with fluctuating inflows and outflows, turning positive in March 2023 with 548 crore rupees and further increasing to 6,091 crore rupees in March 2024. Interpretation: high outflows in earlier years suggest substantial investment in growth and expansion. The positive cash flow in recent years indicates a shift towards positive returns from investments or reduced capital expenditures. Cash from financing activities. Trend: consistently negative, ranging from -5,729 crore in March 2013 to -48,536 crore in March 2024. Interpretation: the consistent outflows imply ongoing repayments of debt, dividend payments, or other financing activities. The increasing negative cash flow in recent years could reflect larger dividend payouts or reduced new borrowings. Net cash flow. Trend: shows variability with both positive and negative figures. From -152 crore in March 2013 to -5,365 crore in March 2022, then recovering to 1,893 crore rupees in March 2024. Interpretation: the fluctuations indicate variability in overall cash management. Positive net cash flow in recent years highlights a better balance between operating, investing, and financing activities. Pros: strong operating cash flow reflects a healthy and growing core business. Improving investment cash flow indicates better returns or more strategic investment decisions. Cons: negative financing cash flow. Persistent outflows suggest high capital return to shareholders or significant debt repayments. Variable net cash flow. Fluctuations can signal inconsistencies in overall cash management, which may require attention. Conclusion: TCS demonstrates a strong ability to generate cash from operations, crucial for sustainable growth. Despite ongoing negative cash flows from financing activities, the company has shown improvement in managing investment cash flows and achieving positive net cash flow in recent years. This indicates a solid financial position with effective cash flow management and operational efficiency, although careful monitoring of financing activities is advisable. Revenue trends, profit margins, expense management. Let us now focus on revenue trends such as growth or decline, seasonality. Profit margins, like gross profit margin, operating profit margin, net profit margin, and expense management. Profit and loss analysis. Revenue trends. Growth. TCS has demonstrated consistent revenue growth over the years, increasing from 62,989 crores rupees in March 2013 to 244,125 crores rupees in March 2024. This upward trend indicates a strong and expanding business. Seasonality. There is no pronounced seasonality visible in the revenue data, suggesting stable demand throughout the year. Profit margins. Gross profit margin, not explicitly provided, but can be inferred from the operating profit margin and expenses. Operating profit margin, OPM. TCS's OPM fluctuates but remains generally strong, averaging around 27% over the last few years. This suggests effective management of operating expenses and a strong operational performance. Net profit margin, with net profit increasing from 14,076 crores rupees in March 2013 to 47,084 crores rupees in March 2024, and net profit margins improving over time, TCS demonstrates strong profitability and effective cost control. Expense management. Operating expenses have increased alongside revenue but at a slower pace, indicating efficient cost management. The OPM trend reflects this controlled expense growth. Cost of goods sold, COGS not explicitly provided, but the expense trends suggest good management of COGS relative to revenue growth. Earnings before interest and taxes, EBIT, and earnings per share, EPS. EBIT trends. EBIT has shown steady growth from 18,040 crores rupees in March 2013 to 65,960 crores rupees in March 2024. This reflects improved operational efficiency and higher profitability. EPS trends. EPS has consistently increased from 35 rupees and 55 paise in March 2013 to 129 rupees and 21 paise in March 2024, indicating strong earnings growth per share and enhanced shareholder value. Profitability ratios. Return on equity, ROE not provided directly, but the consistent growth in net profit and EPS suggests strong ROE. Return on assets, ROA also not provided directly, but strong profitability and increasing net income imply effective use of assets. Exceptional items and non-recurring costs. Impact, no specific exceptional items or non-recurring costs are detailed in the provided data. However, consistent profit growth and margins suggest that any such items are not significantly impacting overall profitability. Impact on company stability. Revenue consistency. TCS shows stable revenue growth, highlighting strong market position and resilience. Profitability analysis. TCS's profit margins, both operating and net, reflect efficient expense management and strong profitability. The increase in net profit and EPS underscores effective business operations and financial health. Earnings trends. Consistent growth in EBIT and EPS signals positive earnings trends, reinforcing investor confidence and company stability. Overall, TCS's financial performance demonstrates robust revenue growth, strong profitability margins, and effective expense management, contributing to its stability and positive outlook. Overall performance, growth trends, profitability, and operational efficiency. In this section, let us focus on highlighting overall performance, growth trends, profitability, and operational efficiency. Provide insights into the company's financial health and potential future outlook. This is done based on trends and growth, profitability and margins, operational efficiency, profit before and after tax, earnings per share, EPS, details from quarterly earnings reports over the past several quarters. Quarterly earnings analysis. Trends and growth. Sales growth. TCS's sales have shown a consistent upward trend from 45,411 crores rupees in June 2021 to 62,613 crores rupees in June 2024. Notable increases are seen in the last few quarters, indicating strong growth and expanding business operations. The growth is steady without significant declines, reflecting robust market demand and operational expansion. Profitability and margins. Operating profit margin, OPM %. The OPM has generally ranged between 25% and 28% over the quarters, with fluctuations observed. The margin was at its highest in June 2021 and March 2024, 28%, and lowest in June 2022, 25%. The fluctuations in OPM suggest variations in expense management and operational efficiency but remain within a stable range. Operational efficiency. Operating profit has steadily increased from 12,663 crores rupees in June 2021 to 16,662 crores rupees in June 2024. This reflects improved operational efficiency and cost management, despite occasional fluctuations. Expenses have risen in tandem with sales, from 32,748 crores rupees in June 2021 to 45,951 crores rupees in June 2024. The increase in expenses is consistent with revenue growth, but the management of these expenses appears effective, as evidenced by the stable operating profit margins. Depreciation has also increased from 1,075 crores rupees in June 2021 to 1,220 crores rupees in June 2024. The gradual increase in depreciation aligns with asset investments and expansion. Profit before and after tax. Profit before tax, PBT has grown from 12,163 crores rupees in June 2021 to 16,231 crores rupees in June 2024. This positive trend indicates strong operational performance and effective cost management. Net profit has increased from 9,031 crores rupees in June 2021 to 12,105 crores rupees in June 2024, demonstrating strong profit retention and effective tax management. The net profit has been relatively stable with minor fluctuations, reflecting a stable financial performance. Earnings per share (EPS). EPS trends. EPS has shown a steady upward trend, rising from 24 rupees and 35 paise in June 2021 to 33 rupees and 28 paise in June 2024. This increase highlights consistent profitability growth and value enhancement for shareholders. Conclusion: TCS exhibits strong financial health with consistent revenue growth and improved operational efficiency. The company maintains stable profitability margins, demonstrating effective expense management. The upward trend in operating profit, net profit, and EPS underscores TCS's robust financial performance and positive outlook. The consistent growth in sales and earnings reflects a solid business foundation and suggests continued success in the future. Company stability and competitive positioning. In this section, focus is on current market price positioning, price to earnings ratio, PE, valuation comparison, growth expectations, market capitalization, size and stability, investor confidence, dividend yield, dividend %. Income generation, company strategy, net profit, profitability comparison, profit trends, quarterly profit variation, growth volatility performance trends, sales, revenue scale, revenue consistency, quarterly sales variation, sales growth, market trends, return on capital employed, ROCE %, efficiency and profitability comparative performance compared to peers in the same industry. Financial metrics analysis. Current market price, CMP hours. TCS, 4,155 rupees and 5 paise. Comparison, TCS has a significantly higher CMP compared to its peers, indicating a premium market valuation. This may reflect strong market confidence or a higher growth expectation relative to companies like Infosys and Wipro, which have much lower CMPs. Price to earnings ratio, PE. TCS, 31.59. Comparison, TCS's PE ratio is above the median of 32.08 and higher than peers like Infosys, 27.29, and HCL Technologies, 25.81. This suggests that TCS is valued higher by the market, potentially due to expectations of robust future growth or strong current performance. Market capitalization, Marcap hours CR. TCS, 15,03,351 rupees. Comparison, TCS leads in market capitalization by a large margin, showcasing its dominant position and significant market presence compared to peers like Infosys and HCL Technologies. A higher market cap often signifies a larger and more stable company. Dividend yield, dividend %. TCS, 1.32%. Comparison, TCS's dividend yield is relatively low compared to peers such as Infosys, 2.17%, and HCL Technologies, 3.33%. This might indicate a preference for reinvesting profits rather than distributing them as dividends. Net profit, NPQTR CR. TCS, 12,105 rupees. Comparison, TCS has the highest net profit among its peers, indicating superior profitability. This strong performance highlights TCS's operational efficiency and market strength. Quarterly profit variation, QTR profit VAR %. TCS, 8.72%. Comparison, TCS's profit variation is relatively stable compared to peers like Persistent Systems, 33.94%, and Tech Mahindra, 22.96%. Lower variation suggests more consistent profitability and less volatility. Sales QTR CR. TCS, 62,613 rupees. Comparison, TCS leads in quarterly sales, significantly outperforming peers like Infosys and Wipro. This indicates strong revenue generation capabilities and market demand for TCS's services. Quarterly sales variation, QTR sales VAR %. TCS, 5.44%. Comparison, TCS's sales growth is consistent with peers and slightly above the median of 5.24%. This suggests a steady growth trajectory in sales compared to peers like Wipro, which has seen a decline. Return on capital employed, ROCE percent. TCS 64.28%. Comparison: TCS exhibits a significantly higher ROCE compared to its peers, indicating exceptional efficiency in generating profits from its capital investments. This positions TCS favorably in terms of capital utilization and operational efficiency. Impact on company stability and competitive positioning. Market positioning: TCS stands out with the highest market cap and net profit, reflecting a strong competitive position in the industry. Valuation: the higher PE ratio suggests that TCS is highly valued by the market, potentially due to strong growth prospects. Profitability and efficiency: TCS's superior ROCE and high net profit highlight its efficiency and profitability compared to peers. Dividend strategy: TCS's lower dividend yield indicates a focus on growth and reinvestment rather than high dividend payouts. Sales performance: leading sales figures and moderate growth rates reflect robust demand and effective market strategies. Overall, TCS exhibits strong financial performance and market dominance relative to its peers, with high profitability, efficient capital utilization, and significant revenue generation. The premium valuation and high market cap underscore investor confidence in TCS's growth prospects and stability. Changes in promoter, FIIs, DIIs, government, and public shareholding. In this final section, let us evaluate the company's ability to generate cash and manage its financial obligations. With focus on changes in promoter, FIIs, DIIs, government, and public shareholding with the objective of evaluating stability and investor confidence. The shareholder pattern of TCS reveals several notable trends that impact the stability and investor confidence in the company. Promoter shareholding. Promoter shareholding has remained relatively stable over the period, starting at 72.19% in September 2021 and decreasing slightly to 71.77% by June 2024. The minimal fluctuation indicates strong control by the promoters, which often signifies stability and strategic consistency. However, the gradual decline might suggest a slight dilution of control or redistribution. Foreign institutional investors, FIIs have shown a consistent decrease in their shareholding, from 15.37% in September 2021 to 12.35% in June 2024. This declining trend could reflect decreasing confidence or a shift in investment strategies by international investors, which might impact the stock's liquidity and market perception. Domestic institutional investors, DIIs have increased their stake from 7.89% to 11.00% over the same period. This increase indicates growing confidence among domestic institutions, which is generally a positive signal for the stock as it suggests increased institutional support and potentially better stability. Government shareholding. Government shareholding has been minimal and relatively stable, ranging from 0.04% to 0.06%. This indicates that government ownership does not significantly influence the stock's stability or investor confidence. Public shareholding. Public shareholding has seen a gradual decline from 4.51% to 4.82%. This decrease, while relatively modest, suggests a slight reduction in public investment, which could be a result of the shifts in institutional investment patterns or market sentiment. Overall investor confidence and stability. The overall investor confidence in TCS appears to be influenced by the changes in institutional holdings. The increase in DII shareholding is a positive sign, as it often reflects growing confidence among domestic investors. However, the decline in FII shareholding might raise concerns about international investor sentiment. The stable promoter and government shareholding indicate that there is no major structural change in ownership that could destabilize the company. Cash generation and financial obligations. Evaluating TCS's ability to generate cash and manage financial obligations would require examining its financial statements. Generally, stable or increasing institutional and promoter shareholding, alongside positive trends in cash flows and financial health, are indicative of strong financial management and the ability to meet obligations. The trends in shareholding suggest a mixed but overall stable outlook, with increased domestic institutional support balancing out the decline in foreign investments. In summary, TCS demonstrates a stable ownership structure with positive domestic institutional support, though the decline in FII shareholding might warrant further investigation. The overall stability of shareholding patterns points towards a generally stable investor confidence and suggests that the company is well positioned to manage its financial obligations effectively. Thank you for watching. If you like this analysis, please like, share and subscribe. Also, do not forget to visit parthkuchana.com.